Today's guest is John Tait, the global MD or managing director of the payments market at TNS. So they are a entrenched, powerful payment network, payment company. Been around for 30 years. John has been in payments for over 20 years. So he is a rare veteran that I talk to, where he understands the history of the payment landscape and all the ins and outs. He's been to all the conferences. He knows all the people, all the companies. And so he talks about what people don't appreciate about the current payments infrastructure, where things are going, what TNS and his business is trying to accomplish in the world, and the integration and role of crypto in the revolution of payments. So really fascinating conversation, and I hope you enjoy. Here is John Tait. All right, John, we're live recording. I'm excited to chat with you. You're working on a business model and a business size that I usually don't get a chance to talk to folks in. I understand that there's different branches of TNS. You're focused on the payments market business. The overall company is over 1,000 employees, fairly large organization at this point. How do you sort of describe the architecture of the business? Like what industries it touches, and how do you sort of map it out for someone just trying to get a sense for the organization?
Yeah, sure. Thanks, Mike. And first of all, thanks for having me. Well, the business itself started just over 30 years ago. And I know that from a startup perspective, the founder of the business was solving a use case that was centered around payments. And what was happening at the foundation of the business was that point of sale terminals back in the early 90s were largely communicating with banks and processors over PSTN or dial connectivity. And what was happening was that the payment terminal and the banks were processing transactions, but they were getting lost along the connectivity line. And as a result of that, our founder, the use case that he was solving for was building some software and some technology that monitored the movement of the payment transaction from the device to the bank or the processor and then back again to make sure that the transaction was processed. And that's where our business was founded, and to this day is how the mission critical nature of what we do has sort of grown up to where we are today, to the business that is architected in essentially three businesses or three divisions. We have, first of all, a communications market division that largely operates out of North America today only, and supports really two types of things. It's a wholesale telecommunications company, and it also does a lot of work in caller identification and preventing robocalling in North America. So that's sort of division number one. Division number two for us is a business that was founded in the ecosystem of financial markets. So we connect stock exchanges, buy and sell equity brokers, foreign exchange providers all around the world. So if you think about it really simply, all of the stock exchanges around the world need to connect with each other, and there's a central network that sits in the middle of those stock exchanges to move transactions, and that's what TNS does. That's one of the roles that TNS fills in that ecosystem. And then lastly, the division that I work in is the payments market division, and for us, we've sort of built on that foundation of the payment terminal, and connecting from the point of sale through to the bank and back again, to a business that today operates in 60 markets around the world. And what we do at its most simplest level, we enable our partners to accept a payment where they can take a payment from any type of device, website, digital app, etc. They then can connect a payment to a bank or a processor or an ATM deployer or whatever it may be, and then we process a transaction. So we're running infrastructure as a service. We're an infrastructure as a services business, and we accept, connect and process payments for all sizes of organisations, from startups looking to get into the ecosystem of payments and don't want to necessarily run the entire value chain that's required to be in that space, right through to large multinationals that operate in many markets around the world where we're supporting their business. So it's been a great journey for the company. You know, we've done a lot and we've learned a lot over the years. We've gone through public ownership to private ownership, and we've had many different sort of profiles as an organisation over the 30 years. And we sit here today as an organisation that is really part of the fabric of the industries in which we operate.
And what about you personally? Did you come from an area where you had a unique insight into how the payments network was structured, and how do you sort of view like your expertise prior to joining?
Well, I'd say it was by good luck, Mike, not good management. So when I was young and at school, I must admit, much to my parents' distress, I wasn't the most studious kid, and I didn't really enjoy the journey of education all the time. So as soon as I could get out of school, I got out of school, and as soon as I left school, I joined the workforce, and part-time did some secondary education, and found that I hated the secondary education. So I jumped out of that as quickly as possible and took a full-time job in Sydney, in Australia, working with an organisation called the National Australia Bank. And I was lucky there. Through my journey, I got to move into. I started in payments. I was actually working in cheque clearing and settlement of cheques and those sort of things. And I moved quickly into electronic payments, and that's really where I started to learn my trade. So initially, I was an apprentice, so to speak, learning my trade through the job in payments, and I worked there for a number of years. And then I joined an organisation called First Data, and they were a big payments organisation as a standalone entity back then. And I spent 15 years working there. And two things that were fairly significant for me through that journey was, first of all, I continued to learn and do my apprenticeship and learn more about the industry and the way in which the mechanics of it work. And secondly, the managing director of the business, who became a very significant influence and mentor for me over many years, he made me promise when I joined the business that I'd do a degree. So I took my apprenticeship and went and did an MBA, did a master's degree in business administration, and through that journey of First Data, starting at National Australia Bank, I sort of became more and more deeply ingrained in the world of these payments to the role that I'm in today. So I can't say that when I was going to kindergarten, Mike, I was waking up every day saying that I wanted to be in payments. It wasn't sort of the childhood dream. It was definitely more by good luck than good management. But as I reflect on it now, after 20 odd years doing it, it's been a great journey for me.
And what are the most influential trends happening now? When you think about payments, you're not thinking about crypto particularly, and not to seed you, but if you think about payments as the broad landscape, is crypto a significant influence in your world? And if not, what are the most influential trends happening today?
Yeah, today for us, crypto is not a huge influence to us for the primary reason that we move largely regulated currencies. And we do a lot of stuff in retail payments. So for us, crypto is certainly on the horizon, but it's not intimately involved in how we operate today. There's sort of the big 3 or 4 big trends that influence where we play and operate in payments. Certainly start with software. We're seeing a lot of disruption in the space of software. And what software is doing is it's changing the user experience for the facilitation of payments. So, if you sort of go back, 10 plus years ago, you didn't think about ordering food and paying for food through an Uber app, or buying your music 15 years ago through an Apple iPhone. And what sort of that software experience has done is it's made you think secondary about the payments experience. It's very much integrated into what's happening today, is that payments is becoming part of software, and software is becoming part of payments. So the user experience around the integration of software and customer experiences is one big trend that we see, and that's certainly continuing to evolve. And we're seeing a lot of organisations sort of that were traditionally SaaS players becoming more involved in the payment space. The second thing that we're seeing is emerging, and certainly going to continue to shift the way in which we think about the business, is the shift and the transition to 5G. The world is moving quickly to 5G. We've been through a fairly strong digital explosion over the last 10 years in payments. That got accelerated somewhat through the pandemic, and we continue to see the evolution of the shift to digital on the back of 5G and more connectivity being available in the world, being a continued influence on where we land and how we think about things going forward. The third thing is that the combination of software or information in software and data in 5G, we see that more and more data analytics will be a key part of what happens in payments going forward, and being able to improve user experiences, preemptive buying, repeat buying, those sort of things that come from understanding more about the consumer and what they're actually doing will be a key thing for us, key thing for the industry. And finally, like everything in industries that involves money, security, compliance, making sure that we're protecting people's data, the information that we carry is quite sensitive, and making sure that we maintain the integrity of the payments industry at a global level is a critical part of what we do. That trust element that we have is critical for all of us. We as consumers don't necessarily think about it every day, but at TNS as an organisation, the compliance and security aspects that we bring to everything that we do are very much forefront of the innovation and the agenda that we run to support the partners and the customers that we have.
Got it. Okay. And then when you think about the broad industry, not so much your company, but you think about software, particularly like mobile software, mobile application software. You gave the example Uber Eats, data analytics. Are there other areas that are low-hanging fruit, or like, do you think about, for instance, I was reading earlier about the Amazon Palm scanning device that they just rolled out across all of Whole Foods. Do you think of bioinformatics, or I guess that's biodetection? I forget what the term is. Biodetection of either your retinas, your eye, or fingerprints. Is that becoming a behind the scenes? Is the goal there to make it both easier and then reduce chargebacks or reduce fraud, which ultimately is chargebacks? Is that something that's being talked about or rolled out, or is it more on the like tech savvy merchants like Amazon who can build their own system?
Yeah, it's a good question. I mean, that sort of technology is certainly on the horizon. But if I brought it back to be a little bit more grounded in where we are today, there's probably 8 key trends that are influencing the enterprise strategies and low-hanging fruit, to your question, as to what's influencing people here today. So I think that the sort of here and now is that, first of all, we're seeing changes in the point-of-sale environment. And in particular, we're seeing that payment terminals may slowly dematerialise themselves as we're seeing more API-led based cloud software solutions coming in to accept the payment. So that software conversion that we talked about before is certainly changing the point-of-sale environment. The second thing, and this really came out of the United States, is that we've seen more adoption of robust business management solutions. And what's happening there is that the adoption of POS solutions or point-of-sale solutions that are much broader than just accepting a card payment has led the shift to being an evolution that's moving merchants and retailers to look at services that are more bundled, more robust, easier to use in their entire business environment. It's that software play again, and then payments are sort of hanging off the back of that. So we're seeing that more and more. The other thing that we're seeing a lot of, and it depends on who you talk to, depends on what sort of buzzword is used, but the growing need of omni-channel or unified commerce, which really did accelerate through the pandemic, which has driven the need for us to be able to support and businesses to be able to support all aspects of a retailer and a consumer's buying experiences. They look for that single experience, whether they're buying through a digital app, whether they're buying in store, whether they're buying online on an e-commerce site. All of those experiences need to sort of interlock and come together to promote the user experience, but also the loyalty and the repeatability for the consumer to be able to manage. So that's sort of a key thing that we see. We also see the types of payments that the consumers are looking to pay with changing quite significantly. So you talked about the Amazon experience with biomechanics and biometrics. That's sort of one thing, but there's also multiple payment methods that people are using. And alternative payment methods have boomed over the last few years, with many of the local payment methods expanding and the alternative payments coming in and taking a different position. Whether it's an Apple Pay, a Google Pay, a Samsung Pay, there's a whole bunch of sort of aspects of payments that are changing. And there's the global providers in the names that I just mentioned, but there's also the in-country, local, regional players that are also making their presence known. For example, a WeChat in China that's using QR codes to make payments. Those sort of things are sort of evolving across the globe as you start to look at that more deeply. I touched on 5G before. 5G is going to change the payments world in particular, and cloud computing, and that's going to drive more digital. And to the point on security that you make, we're certainly going to see a lot more tokenization of payments, where tokens are emerging to expand and augment the value of payments. And then lastly, we think that there's a strong shift for payment orchestration, which is really an increase in the complexity in payments, has driven a need for orchestration to emerge as a model to streamline connectivity, data and transaction management for all of the participants that play within an ecosystem. And today a lot of those interfaces and that integration is very clunky, very bespoke, but the evolution and the emergence of orchestration, we think, will bring a lot of these trends together to enable things to payments to be more integrated from the point of acceptance through to the point of settlement, and the reconciliation processes, the chargeback management, the voucher request activities, all the things that sit within the middle of that. We think that there's a key role for orchestration to start to simplify that and bring it together. So it's a long-winded answer, but from a trends perspective, they're sort of the things that we're seeing influence the marketplace here and now.
Interesting. And why does 5G play a large role?
That's a good question. So for 5G, I guess the first thing is that the shift to mobility has clearly influenced and shaped the underlying forces that drive digital payments. So mobility has been a key factor in that. And what we've seen is a shift from desktop to the consumer pockets, and people are now doing more things. And I touched on before is that, just a small example is the shift for consumers where mobile payments have become the default setting for ride hailing, food delivery, music downloads, and other digital experiences. So 5G, we think, is similarly poised to change the business and technology of payments because of the greater levels of connectivity and, most importantly, real-time access to online services. It's going to change the way we think as consumers about the distinctions between what's a digital and a physical world, and how those interactions and connectivity needs expand. Is really going to be we believe is going to be really expanded through the experience that is before the transaction and after the transaction, not necessarily just in the transaction itself. So if you think about that sort of more in the digital world, you've got more options to look under a 5G at more connected devices at the pre-experience to actually buying. So you're going to have higher speed, always on connections that will enable consumers to have more choices. Whether it's a connected car that's driving into a parking lot that wants to pay for its parking and the boom gate goes up, and giving the driver in the car an option to go from one car park to the next based on price, to personalised content that's at their fingertips as consumers look to make their choices. We think that 5G experience and that pace of connectivity is going to enable more choices before the interaction, which then will drive greater payments, and then the after payment experience we think will drive more loyalty outcomes as rewards and those things become more personalised and tailored back to a consumer. So I don't know if that sort of resonates for you, but we certainly see 5G driving a lot more of that connectivity, and the growth and acceptance for the consumer will drive some of the shift in which we think about it.
And on a scale of 1 being very marginal slash you barely even notice it. The consumer barely notices it, to 10 being a significant, huge, innovative, drastic change. How big is 5G? Is it like a 3 or like a 9 or somewhere in between?
I think it's well above 5,
Yeah.
and let me sort of articulate why. I think the first thing is that a predictable outcome of 5G is going to be the number of devices and objects that are fitted with connected sensors. So we're going to have more connectivity that is out in the marketplace. And those sensors will provide more information about users, environmental conditions in which they sit, and essentially what we're going to see through 5G is a web of virtual nerve endings for cloud and edge-based solutions that can really allow a consumer to inform, enhance, and initiate a payment experience. That doesn't exist today in the way in which it will under a 5G environment. So I think we're going to see a lot more connected consumers, a lot more connected devices, and as a result of that, you're going to have a lot more opportunity for acceptance points, acceptance of payments to be in place for a consumer. And what we've seen over the last 5 years is that has accelerated in the 4G world as we move to a more connected world that probably has greater permissions for consumers to be able to actually make choices. We think that it's going to explode more. So I think it's well above a 5. I don't think it's a 10, but I think it's probably around the 7 to 8 because of the growth in those devices and locations that are out there.
Interesting. I have a note here. I'm curious to ask you about this concept of a holy trinity of the payments infrastructure. Are there people that are working within larger companies? Is there a certain way they should think about payments that you would articulate using this holy trinity structure? Does that resonate with you?
Yeah, it does. We spend a lot of time on it. And the Holy Trinity for us is sort of, as I introduced the company at the outset, it's accepting a payment, it's connecting a payment, and it's orchestrating a payment. So for us, that's sort of the way in which we think about it from an infrastructure as a service provider standpoint. And what's driving the Holy Trinity is the complexity that's changing in the payments world. If you sort of break it down and you think through the elements, the three stools of the three legs of the Holy Trinity, and you sort of start with acceptance. What's changing on acceptance is that the world is becoming extremely more complicated for a retailer and for a merchant to take a payment. First of all, we see those changes in the POS environment that I talked about previously, where we're seeing terminals move from a traditional base to a soft terminal, to an iPhone terminal, whatever it may be. We're seeing changes in the environment. We're seeing the adoption of POS solutions based in the cloud. We're seeing more integrated solutions through API integrations. We're seeing consumers wanting a consistent experience when they go shopping in retail, so the omni-channel solutions need to permeate across all aspects of a retail experience. And lastly, we're seeing some of those shifts in tokenization and security. So if you sort of think about how that comes together, the complexity in acceptance really comes around taking payments at inline, online and in-app, in-store payments, unattended payments, and platform payments. So running all of that infrastructure in isolation is a real challenge and struggle for a lot of people to be able to manage. So the first thing that we see around acceptance is the complexity. The second thing that we sort of see around connectivity is that we're dealing with complications in connectivity now that we probably didn't deal with 20, 30 years ago. We're looking more and more now at latency and the speed of connectivity and how you can handle latency and volume at the same point across different means of communication, whether it's a SIM, whether it's an SD-WAN solution out of a retailer, whether it's a point-to-point connection, whether it's a VPN connection, whatever it may be. Complications around latency and scale are certainly important things to manage in connectivity. We see security as a huge aspect around connectivity and payments acceptance. We see the need to monitor and alarm transactions and payments. Consumers now, pre-pandemic or through the pandemic, the redundancy for electronic card transaction failing was cash. And the DR plan for a lot of consumers was that most of them would typically carry an element of cash in their wallets. That DR plan has gone now. Less and less consumers now across the globe are carrying cash in their wallets. So monitoring and alarming and being able to make sure that that system and environment is always working is a key thing for retailers and merchants and businesses to be able to keep up with. Then the complexity in operational support, telecommunications supply management, and obviously cost management as you think about moving to the 5G networks, the expansion of cloud computing, and the need to be able to sort of protect that data have become more of those complications. So what we've seen is that complications and innovation has driven the need for acceptance to improve and keep pace with the change of the consumer. The underlying connectivity is changing to keep pace with scale and with latency and with cost management as well as operational support. And lastly, we see the need for orchestration and processing to be the new and emerging response to the ever-increasing number of complexities that we see in payments. Whether it's integrating to an organisation's back-end systems or ERP systems, whether it's integrating to an alternative payment method or a loyalty platform, or whether it's doing something at the back end to manage risk, fraud prevention and chargeback management, there's a lot more integrations that come out of the requirements of accepting payments these days. So as we sort of step back and look at the Holy Trinity, for us it's about how do we simplify the infrastructure to enable a merchant to accept whatever type of payment through any channel that a merchant wants, that the consumer wants to make. Then how do we make sure that we connect that payment at the device, at the edge, and then back to a cloud to make that ecosystem safe and secure from the acceptance point to the connect point. And then we need to process that transaction, and processing that transaction can be everything from simply sending it out for authorization to least cost routing to manage cost reductions for a retailer or a merchant, to data encryption and tokenization and vaulting services, and providing a unified customer and operational support layer that makes that integration simple in the way that I've just described. So they're the sort of ways in which we think about the Holy Trinity of across accept, connect and orchestrate. And then lastly, as a managed service provider, we sort of wrap that up as a service. So delivering that as a service where we take responsibility for the support services, for the management information that needs to be presented back, for the redundancy and the failover and the security and the fulfillment services that we bring. We sort of bring the outer layers of that to be PCI DSS compliant, safe and secure, wrapped up as a service, so the Holy Trinity becomes something that our customers consume based on the components that they need support with in their business strategies.
What are your thoughts? You mentioned tokenization. I'm not sure if that is a reference to crypto, but I want to ask you about the influence that crypto has. It certainly seems like at some point these software systems, which are run on banks and incumbent payment companies, are like 50 years old or 40, 30 years old. They're on old technology that people don't even learn anymore. And the cost and practical nature of changing that is so daunting that these companies just don't do it, which is, I think, a good business decision. But it also creates pressure to innovate and change. And crypto has a structural advantage over the incumbent methodology. And I'm curious how you see this transition happening, like from old school payments to new decentralized payment networks and tokenization. My sense is that it happens on the fringe initially, is that there's like peer-to-peer transactions happening. These networks are being built out, and then companies are established utilizing this technology to sell into existing organizations. And that just kind of eventually that's the competitive edge that like sheds the old version and then integrates the new version of crypto. Does that resonate with you, or are you seeing crypto integration happen differently, or how do you sort of see that evolutionary process?
I completely agree with you. So I think there's two major things, Mike, from my perspective that I'm seeing that are emerging with crypto. Number one is that quite successfully the crypto ecosystem, for want of a better term, has influenced quite aggressively from the edge or from the fringe, to use your word, and use cases, digital currencies, the ability to solve complicated problems in a much simpler way has been done really well from the disruptive element of that ecosystem. And from my perspective, I hope that continues to happen, because I think that continues to put pressure on the marketplace. It continues to put pressure on the incumbents, the legacy providers, those sort of organisations that you reference. And I think that's a positive thing, and it creates opportunity for change, it creates competition, but it also creates innovation from a consumer standpoint. So more and more, I think that has to continue to happen. So that's sort of element number one, and I completely agree with you. The second thing that I think is interesting, and it's starting to happen in some markets around the world, is that we're seeing central banks embrace crypto, and digital in particular. And there's a number of trials that are happening and are underway from discussion papers from a number of the central banks around the world that are starting to look more closely at what crypto and digital could do, and in particular on the digital side, how that could reshape the way in which payments happen. I think the question that still exists for me is where we best find the use cases and the marketplaces for crypto to work and to operate, and I think that's still evolving. But I think if you go back to sort of tier one, which is the disruptive edge, that's going to find its natural home, and then that will become more of the way forward. And it's like a lot of things that we've seen in the industry that we've talked about with rideshare and those sort of things. I think ultimately that influence is going to continue to push its way in to become more of the mainstream. So my view is that it's going to come from a lot of push from outside in to the traditional, but also I think I'm starting to see around digital some shift within the regulators in particular to start looking more at how they can bring some of this stuff together.
And what's their motivation? Is the regulator certainly, I would imagine they're multifaceted in their motivation, but the skeptical side of me is cautious about their motivation to control everyone's accounts, to have total visibility, like an Orwellian dystopian perspective, that the central bank issued currency, they know where every dollar is at every moment in everyone's account. They could see all your transaction history, total visibility. And in some level, cash is beautiful because it is absolutely anonymous. And the fact that it's not on a computer gives it that guarantee of anonymity, being anonymous. So how do you think of the motivations, and maybe the implications of those motivations are the way that this actually plays out? I think there's a real difference between what, especially sometimes companies, especially as companies get large, they start to say things that they don't actually carry out, but governments are notorious for this. And I think everyone is, aware of that, speak, right? It's like, oh, we want to make a really secure network, but in reality, we have total control over this. And so there's a strange sort of situation that happens. Do you think that how do you sort of get a sense for the temperature of governments and their desire to move forward in these tokenized, centralized exchange currencies?
Yeah, the optimist in me. So Mike, stay positive with me. I won't go.
Oh yeah, I'm an eternal optimist.
But the optimist in me is twofold. Number one is that I think my personal view is that the innovation will take a lot of complexity and cost and bureaucracy out of the system today. So the optimist in me is that the technology evolution is going to simplify the ability for us to exchange value as users of the system, whether we're businesses or consumers or whatever it may be. And I think the central banks are starting to see that. And I think, and the second thing, the second optimistic view for me is that the ultimate reward for this is that the consumer and the business gets value and money sooner and safer. And I think the second element for them being involved is to make it safer. So they're going to want to have some level of regulation and protection around digital to protect the consumer. I think is probably one of their key motivators, and I think ultimately they see the benefit of that. But they couldn't have the benefit of that without it being a regulated currency, is my guess. No one's ever really said that to me, but I'm guessing that would be a motivation for the central banks.
Yeah. And do you see the central banks, certainly China seems to be doing their own thing, but as far as America, Western Europe, Australia, do you see a pattern emerging of how they're thinking about deploying these systems?
No, it's very fragmented at the moment. There's a number of committees / councils that are starting to work on this, but it's early days, Mike. And the other thing that's driving this is open banking, and open banking becoming more accessible, shifting of data becoming easier to do amongst competitors, for want of a better term. So I think open banking, digital, and those elements of policy framework coming together are still evolving, but I haven't seen anyone sort of pick it up yet and say this is going to be a global standard of the way that we're going to operate. It's very much being done market by market, geography by geography.
Mm. Are there other interesting trends you feel that are relatively new or underappreciated that you have observed in the payments landscape?
I think there's a few things, probably two things that I would say that we're seeing. We're hearing more and more from a market perspective, and I wouldn't say that they're necessarily trends, but they're certainly things that are becoming more front of mind for conversations that we're having, both in the financial services space, but also direct with retailers and merchants and businesses of all shapes and sizes. The first thing is that the pandemic has certainly put more of an emphasis on organisations' focus and capability around redundancy and reliability in electronic payments. We see a lot more scrutiny around the way in which we take our products and services to market to be able to support multiple users in the payment ecosystem. So if one person fails, so I'll give you a good example, right? In our connectivity business, we run our network across multiple carriers. So if today, let's hope it never happens, but if AT&T was to have a service failure in the US, we would automatically route those transactions over to Verizon. So within our operating model, there's no points of failure around a connectivity provider. So if one telco had a problem, we automatically fail over, so the system continues to operate. And what we're seeing more and more in the conversations with our clients coming out of the pandemic is that electronic payments now is all that my consumers really want to pay me with. So I need to make sure that when someone turns up to make a payment, if they fill their car up with gas, that my payment terminal is going to work. So multiple layers of redundancy and reliability is one of the key focus points that we're seeing more and more. The second thing for us that, and again, it's been a trend for a while, but it has certainly continued to accelerate, is the requirements around security. Payment card industry data security standards is a really big item for us in everything that we do. More and more organisations are fascinated with the protection and prevention of, the protection of their brand, but so more and more the prevention of their customer and the data of their customer. That's being overlaid with a lot of regulatory reform that's happening at a government level across the globe. But certainly we're seeing more and more focus on security, compliance, and driving together more focus on that PCI scope and how we manage that. Third thing for us is data aggregation. People are wanting to be able to do more with their data, and in particular, they're wanting to be able to match in-store data with payments data and start to think about how we can use that. So, for example, people want to be able to correlate when it's a nice day. Do I need to get people to come in and buy ice creams, or do I need to get, when it's raining, do I want them to come in to get umbrellas? And what's the marketing programs that I'm sending out to my consumers on the back of that? So the aggregation of data is becoming more and more important, and combining that with payments information, payments behaviour, with SKU data in store, and then getting that out to the hands of the consumers is a really important thing, which is driving loyalty for them. So they're not massive trends in terms of moving to biometrics, moving to crypto. That's there, that's on the horizon, and we're sort of that's an evolution. I think that we will continue to work towards. It's not necessarily going to be a revolution, a lot of the stuff that we're dealing and seeing with today is really around those three elements that I just talked about, to enable them to take a payment from a consumer using any form at any type of device.
Interesting. And what do you think that people that are not in payments, like if there's a thing, either an individual statistic or the way something works, what do you think you understand, having been in it for a long time, that other people wouldn't appreciate or have any clue as to what's going on? What do you see that other people don't see?
I think the one thing that I would say about payments that I see is that the ecosystem of payments, and particularly retail payments for consumers, is exceptionally complicated. You know, the way that we've set it up over many, many years has been very successful. You know, and it's served a lot of people really well for many, many years. But the machinations of what sit underneath payments is extremely complicated, whether it's, you know, things from interchange agreements to scheme compliance to four-party card schemes to everything else everything that's sort of involved in the way in which we don't really understand when we as consumers walk up and tap a card at a terminal, or if we go online and buy something, what happens behind the scenes from the time you put that information in to the time it gets to an authorisation, cleared and settlement and settled. There's literally a whole layer of complexity that sits behind it. So what I see, my insight to that would be, as businesses from all shapes and sizes start to think about what they need to do around payments and where they get involved, partnerships are really important. There's no one player that sort of sits within the ecosystem that manages that from start to finish. There are people that participate in certain niches start to finish, but more and more what we're seeing and the way we're thinking about our business is partnerships are critical. Whether it's partnerships with our customers, partnerships with other suppliers, or partnerships with, you know, card schemes and end settlement bodies, the ecosystem of partnership is really critical. So the only thing that I would say is it can be done on your own, but partnerships make it a hell of a lot easier, because using that expertise and that subject matter expertise and specialisation that exists from many people that have built it up is a good value creator for people that are coming into this space for the first time or looking to change the way in which they operate, and those partnerships could probably help with that.
Mm. And if you were speaking to someone who is interested in payments, finds just the concept of currency and payments and the whole thing interesting, where do you point them? Is there somebody in particular on Twitter or some book, or is there an area within payments you think is most interesting to dive into for young people who are curious about the industry?
Yeah, so I sort of have this saying, Mike, that payments are sexy again. You know, I've been around in it for about 20 odd years, and I go back to sort of the early 2000s and late 90s. And, you know, no one really thought about payments. It wasn't a sexy industry. You know, sort of through the mid-2000s, a lot of private equity money came into payments. The annuity types of revenue streams that come with payments, you're not sort of chasing the one-time revenue. You build a payment system and they continue to grow, and the tailwinds in payments are really positive. And, you know, sort of the evolution of that, the change in consumer experiences, and the demand from consumers to be able to do more from a payments perspective has made the industry really attractive again. So as an industry, payments are sexy again. And for somebody that's looking to come into it for the first time, there's plenty of places to start and stop. But the one area that I would call out, if you're looking to come into retail payments and card-based payments, which is going to evolve to sort of the next layer, is I'd start with the big players. Look at the card schemes to learn. Look at how they've grown up. Look at their history. Look at how they're evolving now. They're moving into digital. They're moving into open banking. There's a really good journey that you can sort of take from the history of organisations that have started many, many years ago, issuing the first piece of plastic, to the organisations now that are shaping some of the future. I think they're good places for people to start to look and think about what's happening in the retail space. And then from there, pick your niches. payments is very broad. The term payments means many things to different people. We've touched on crypto. We've talked a little bit about checks when I started my career, and then there's retail payments, and there's everything in between. We haven't spoken about ACH. We haven't spoken about B2B. There's prepaid payments. There's postpaid payments. Pick your niche. It's a very broad space, but I'd start with the schemes and look at what the card schemes have done, because they've been at the centre of a lot of what we've achieved in retail payments for many, many years.
It's awesome. I like it. And are you active online? Are you writing, tweeting, anything you want to throw out personally? We'll have the links to the company in the show notes.
Yeah, Mike, always available on LinkedIn, so people can connect with me through LinkedIn. And my email address is jtait@tnsi.com. That's jtait@tnsi.com. Love to connect with anyone, and they're the best channels to get hold of me.
Sweet. Well, John, thanks for hopping on today. I enjoyed to hear your story and your perspectives in payments.
Great, Mike. Really appreciate it, and thanks for having TNS on. We appreciate it.
Cheers.
Take care.